Right, welcome back to the program. My guest is joining me right here. He is Tajudeen Ibrahim. He's the Director of Research and Strategy at Chapel Hill Denham. Hello, Mr. Ibrahim, and thank you for joining us.
Hello, thank you for having me tonight.
Yeah, welcome to the program. Now, let's try as much as possible. Our topic today, we're looking at Nigeria's trade statistics and capital importation data, but I want to start very basically, because we shouldn't just take Nigerians and assume that a lot of people understand what we're saying. At least for me on this program, I try to break down the figures and try to break down the terms that we use on a normal basis. What is capital importation? What is the capital importation data? What does it mean?
Okay, thank you very much. Capital importation has to do with the importation of goods and services from other countries apart from the domiciled country. So in this case, we have Nigeria, and we are talking about the inflows that came from other countries, like those in Africa and those in the North America regions, and also some other regions across the world. So that is capital importation, and we call it importation because all those monies, all those investments, all those loans are coming into our country that we call Nigeria. So in simple terms, that is what we can describe as capital importation.
Okay, that's what comes into the country. Is that what you're saying?
Yes, it is what comes into the country in form of either investment or in form of deposits, in form of loans by counterparties across the world. And the country we are talking about here is Nigeria. And the countries we are talking about are every other country across the world apart from Nigeria.
Mm. Okay, so for inflows to come into the country, there must be certain fundamentals that should be right for countries or for people or for investors to feel that you have a safe haven to invest or to bring in your money, isn't it? Yeah. What do you think are the things that should be right for capital to be attracted to Nigeria, for example? Sorry, Mr. Ibrahim, that I'm taking you on perhaps an economics 801 or 901 course this morning that it sounded like
fine.
a lecture.
It is just so that we are able to add value to
yes,
to the viewers. So if we say what can we do in this country just so that we are able to attract more capital importation, I would say that it is very important for the country to first and foremost address the issues around security, because security, as we speak, has now come to the center stage in terms of one key thing that this administration has to address. Because I want to invest in a country where I know that I am safe if I have to be on ground, where I know that my staff are safe and can carry on their activities without any challenges or without any threat or fear to their lives and properties. So security, I would say, is on the forefront in that regard. I think the second thing that I will put in no particular order is the right policy. The right policy will attract more investment into Nigeria, and the type of investment we will see in that regard could be in form of foreign direct investments, which I believe is more compelling compared to foreign portfolio investment. And of a critical importance, in my view, is infrastructure. So infrastructure is very important as a factor for us to get right. If we get infrastructure right, we definitely will attract more investment into Nigeria. And in that regard, we will be mostly speaking about foreign direct investment, where a company, a global giant in the US will decide to invest in Nigeria by building their plant in Nigeria to run their operations in this country. But if you want to run operations in this country, you will need power. So we need to address something like that. If you want to run operation in this country, you will need seamless transportation of goods and services in a safe manner. So in that regard, you will need good transportation system, and you will need security, back to security again, because not everything you'll be able to transport via road network. You would have to transport some of them via rail transportation system. And we all know what happened last night, to one of our rail, transport system in the northern part of the country. So things like that would naturally discourage foreign direct investment into the country. And I think they should be addressed, in my view.
Okay. We'll come back to the issue of security in a bit and how that perhaps reflected in this capital importation data as released by the MBS for 2020. At least we'll just suppose 2020 and 2021. But let's get into the nitty-gritty now and unpack this capital importation data. According to the MBS, capital importation dropped year on year by 31% to $6.7 billion in 2021 from about $9.6 billion in 2020. This is the lowest we've seen so far in 5 years. Please, can you just unpack that for me?
I think one key thing that really happened in that case is we were unable to attract foreign inflows into the country, not just because of our structural problems, but because we have an illiquid FX market. So when you have a market that is not liquid in terms of the inflow and outflow of foreign currency, you wouldn't attract foreign direct investment, and more importantly, foreign portfolio investment. So we had a situation where global growth was slowing down, and then after the slow growth, we began to see recovery. So when the global recovery began and Nigeria was also benefiting, we then locally began to have issues around the ability of the country to supply FX to the market. So when investors cannot easily move out their money, they will not be encouraged to bring in their money. And that is one thing that I think is largely speaking responsible for that. As we speak, we are not seeing much in terms of inflow. So year 2022 may also not be a great year in terms of the ability of Nigeria to attract more foreign investment and investors into this country. We need to fix our challenges in the foreign currency market, in my opinion.
Now, if we take it, I'll come back to the foreign currency part in a bit, but if we take a look at the last 5 years, because this is the lowest that we've gotten in terms of capital importation, and it's very worrying. But do you also think that the recession we suffered, we had 2 recessions in like 4 years, or in less than 4 years, almost back to back. 2016, then we recovered, then we suffered another in 2020, occasioned also or worsened by COVID-19 pandemic. So do you think that in the last 5 years that we've seen this capital importation dip, that you can also attribute that to the recession we suffered at least in the last few years? Or we shouldn't just blame the recession, that we also had our own problems because we also walked into the recession. It's like you saw mud water, you just put your leg, you saw a well, you jumped into it.
Absolutely. I think there are 2 perspectives. I just spoke to the first perspective, which is around the structure of our market. If we now move to the second perspective, and which is around the fundamentals of the economy itself, I think partly speaking, the recession that we had in 2016 and also in 2020 also contributed to the low capital importation that we have in those two periods. And I think it is natural, but what we should naturally have seen is that when the economy began to recover, we should have seen capital importation also recovering in line with economic recovery. But we're not seeing that. That is why I first spoke to the structure of the market in that context. So you are correct. The recession that we had in the economy also had a part to play in the slowdown in capital importation. But when countries suffer economically and they begin to recover, indicators such as capital importation and some other ones will also begin to fall in line positively. But Nigeria's case is not like that yet as we speak. We're only hoping that the next couple of quarters could be better, or let me say 2023.
Okay, now let me come back to the FX issues which you raised earlier, and I'll also take it from the recession years, or at least in the last 5 years. We saw Naira volatility, or at least we've seen Naira volatility in the last 5 years. We've never had it as such. Do you think the recession also contributed? That's one. The second part of the question is, with the various FX schemes that the central bank is putting or has put together, we have Naira for dollar scheme, we have now we have the RT 200, a raise to 200 billion, and I guess that is also to bring in more FX into the country. There's also another one I'm trying to remember. Okay, the I&E window was created, at least in the last few years. I'm talking about the last 5 years. So that was also created. We also have like the invisibles market, the SMEs and all of that. Do you think that with all this, yet we're still seeing foreign exchange risk and foreign exchange volatility?
Yes, I agree that the economic recession that we saw is also partly reflecting in the weaknesses that we have seen in the currency within the past 5 years. We bear in mind, or we should all bear in mind, that the Nigerian economy is largely reliant on crude oil inflows, and during years that we have extremely low crude oil prices, the FX reserves naturally will suffer for it, and the ability of the country to supply FX will be limited. So the Naira, will sort of, suffer on that front, and you wouldn't see much of inflows in terms of, capital inflow from other countries. So economic recession partly, played a part in that regard. But if we now talk about the structure of the market, I think in fairness, the CBN has really done a lot in terms of, their responses and reactions to the market, talking about all these, factors you have mentioned, the I&E window, on all those forward contracts, and also bearing in mind, the RT 200 and every other interventions that, the CBN, has really, embarked upon. I think those are, positive. Nevertheless, we are not seeing much in terms of the impact. And the reason is this country, in terms of structure, is excessively reliant on crude oil inflow as a means of foreign currency generation. So what if we consider non-oil sector? If we can fire on all cylinders to ensure that we generate inflows into this economy from the non-oil sector, maybe the story will have been a lot different from what we are currently talking about. And I think it requires a decisive move by the government to ensure that there are policies and they are implemented to ensure that we attract foreign inflows into this country, and they come largely speaking from exports. We have exports from the non-oil sector. So the CBN is trying, but we are not seeing much of the results because of the structure of the economy as we speak. So in as much as it doesn't change, it is unlikely that we will see in a significant shift or change in the way the currency is trading currently.
Okay, since you've dragged me to crude oil, can we talk about it a bit? The A part of the question is, foreign oil, we get like 80% of our FX from the sale of crude oil, yet we've not really seen new investment, at least in the last few years. Someone should not talk to me about Dangote or pockets of Dangote refinery or pockets of others. We should have more Dangotes in the country. Yeah, so it's not just only one. If we have a country of 206 million people with only one Dangote, we are still a poor nation, as it were. So new investment, with the PIA that was signed by Mr. President, do you think that we'll have new investments in that sector in terms of foreign direct investment? Then if we're looking at the capital importation data, we saw more of portfolio investment. Portfolio people, the briefcase people, coming into Nigeria. That's the B part of the question. I'm trying to rush because we have like 5 minutes to the end of this interview. Then the third part is that for states that received capital or that attracted capital, Lagos was on top, but there are also many states that did not receive or attract any capital. What should the governors be doing? Now, are the governors just saddled right now with politicking? Since politics has taken over, states like Imo, Borno, Bauchi, Enugu, Gombe, Taraba, I think, some other states did not even attract capital at all. What should we be doing to those states?
Okay, so thank you. Let me start from the last question, which is around the destination of capital importation. 91%, close to 91% of the inflows landed in Lagos, and about 8% of capital importation is traced to Abuja. So between Lagos and Abuja, we have about 98%, and that means that the other states probably didn't get anything at all. So the government, I believe, from the state level, should be looking into data like this and decide on what can they do to attract investment into their states. We understand the fact that Lagos is the commercial center of Nigeria. We understand the fact that Abuja is the FCT, but there are other states in this country where I believe investors can find opportunities to invest in. So those state governors, in my view, should get in touch with the relevant authority, and rub minds together and look for foreign investment into their state. Ogun State is doing something, but it is just little for it to be reflecting in this kind of data set. So they need to really do more. The second one I will talk about is the foreign portfolio investors. They accounted for 29% of the capital importation in the fourth quarter of 2021. What really happened is that that number is low relative to what we have seen previously in the past like 5-10 years. So we are still battling with inability of foreign investors to exit the Nigerian market willingly, provided with liquidity. We are still battling with that challenge. That is why that number is low. By the time the market is fully reopened in terms of liquidity flows in and out, we are probably going to see more foreign portfolio investment into this country. The final question I will respond to is around, we earn in dollars when we sell our crude oil, yet we are unable to really meet up with some of these issues around FX requirements. We just need to look to diversify, in my view. And I think I want to maintain that. Oil is good, oil is interesting, oil money is very hot, and it is positive for the economy in years of high crude oil prices, but it is not sustainable. We need the non-oil sector receipt in the export market to underpin our ability to generate FX and to also supply FX to the market, in my own opinion.
Okay. I mentioned earlier that I'll come back to security. How much of security was a factor in this? You know, even taking away what we've seen or what we overnight, I was so disturbed with the horrific news around the train and all of that, even the airports and all of that. But how much of security has been an issue, at least in the last few years, that capital importation has been dwindling? Just opposing also that the states that majority of the state, apart from Lagos and Abuja, which you alluded to, most investors will want to come to Lagos and Abuja because there is a semblance of security. But other states, you don't know. You can even be walking on the way, you will be kidnapped. A girl, Bamishe, entered Lagos bus and she could not find her way home again. So how much of security is a factor in all those states? Because there are just pockets of insecurity everywhere.
I think the amount of security concern for foreign investment into this country is huge, in my opinion. We sit here in Lagos, we sit here in Abuja, we sit here in Nigeria, but the news flows that goes around is across the world. All investors globally see all these news and they read about them. So it is a major factor for consideration. Security is material, and I think there wouldn't be much in terms of inflows into other states, just like rightly said, because of security concerns. We have Abuja, we have Lagos, but if we talk about farming, you will find compelling reasons for you to farm in the northern part of the country, in the eastern part of the country. But what about the security of lives and properties in those areas?
Okay.
So security is on the front burner for most investors, given all these news flows that we are having in the past couple of months. And I think they really have to be addressed for us to attract more foreign investment into the country.
Thank you very much, Tajudeen Ibrahim, for joining us today. Tajudeen Ibrahim is the Director of Research and Strategy at Chapel Hill Denham. We've been looking at capital importation data in the country. That's the much we can take on today's edition of the program, because we have something to play before 12. Be the best you can be and be the change you want to see. And most importantly, Super Eagles, go out and soar. Lift our spirits. At least that's one unifying factor. We all want to see you win tonight. So go, 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 Super Eagles. I'll see you all again tomorrow. Bye now.